Hey there. Welcome to the closing bell on the 12th of April for me on the Friday afternoon or midday. And well, we've got quite a bit to get through today, so I will try to make it snappy. Um, to kick off, a couple of weeks ago, I gave you a couple of stocks. I said could be ready to play catch up in the gold space. Things were starting to run and I'm sure people were starting to feel a bit left behind. So I gave you a couple, even one of my current suggestions for clients in one of my services, retirement trader. And if we look at the two and what's happened since, RSG was the first one I gave you. You could have bought that on the Monday after the closing bell at 44 cents. And trading now breaking out above major resistance and 49 cents trading. So that's about 12% in 2 weeks. Um, Hopefully, some of you trust what I'm saying enough by now to have a crack, and you made a bob or two. If you did, leave a comment in the section on YouTube and let me know. That would be good. And also, look, I know I suggested TLG. That's at the moment down a bit from, oh, it's about the same level it was actually. It ran after I suggested it a few weeks before. That's Talga. I still think that's looking fine. So, if you did jump on that, no need to be stressing yet. I think that's just preparing itself to launch. The other suggestion I made in the gold space, though, was Regis, RRL. They actually were in trading halt, and I was thinking there was going to be good news coming um, based on McPhillamys, but it was bad news. They basically their costs doubled from what they were suggesting, up to around $1 billion to develop it. It's a 1 gram per ton mine grade, so it's pretty low grade. So it's making it a bit iffy, the whole project. But the reason I was suggesting the company was due to the fact that it's run off its hedge book and was now exposed to the gold price and was a massive underperformer. And the technical situation for me was looking interesting. I showed you that a few weeks ago. You could have jumped on that around $1.95 on the open, and that trading up at $2.18 and looking pretty hot. And look at all of these resistance levels around sort of 230 to 250 in Regis up through there. And this thing can just go vertical. And with gold looking the way it is, that is a possibility. If we just have a look at the monthly on Regis, really that's the chart I'm looking at, is those massive waves and the pullback into the buy zones. And again, massive wave to the upside, pulling back into the buy zone, which is at 75 to 87%. You guys should know about this if you've been watching it. If you haven't, keep watching, keep learning, and then join one of my services once you realize I know what I'm doing. So there's that last wave. There's the buy zone area there, and just sort of really got hammered, didn't it? Based on its terrible hedge book, been going sideways for a couple of years, even as gold's been taking off. So it's sort of a formation of that rounding bottom, and really I'm thinking, yeah, up through that 250 region is that sort of starting gun where you're really creating targets back to the point of control, the midpoint of this whole wave here. So it's looking ripe. All depends on the gold price, I guess. But so let's have a quick look at that. And here's gold. I mean, all you can say is wow at the moment. It's really flying. And this is quite an interesting period that we're going through right now because it's blasting through this sort of final point of resistance that I've been talking about. And the quick explanation, again, I'm expecting most of you have been watching this, so you might get bored when I keep explaining these things again and again. Major thing, this is a very long-term chart, 2011 major high there. Then you get what is like a distribution of price around that major high, which I'm looking at. And it took 3 years to take shape. So you've got this initial correction, and the midpoint of that point of control, you'll see, is actually very close to that old all-time high. So that's really what sort of often happens, oscillations around that while everyone's trying to work out which way it's going to go. Big strong uptrend, false break on the bottom side. I told you about that at the time. Lots of resistance at the top and work done, revisiting the point of control and the trend turning up and blast off occurring. So we've been following this along, and long-term trend shift there, retest of long-term moving averages there, turning back into the uptrend, buy pivot within the long-term uptrend. So then again, more buy signals, and now it's broken out. So once it's broken out, often you're getting people late to the party coming in here and buying the impulsive move. People who were short through this period, possibly thinking it's going to fall over again. Their stop losses are always above, the high of the range. So there could be lots of stop losses building up around here from people who were getting short, thinking gold would go down. And so then they're all panicking and getting out, which can then cause a really sharp spike. But you have to be aware that often there is resistance levels way outside the range. So this is where I look at that range, and then I'm looking at the areas outside it, 25% and 618 outside. And then double the range is where I'm saying, right, this thing is away and there's nothing stopping it. It's no longer, I guess, under the influence of that sort of gravitational point, that point of control that it's been oscillating around for 3 years. So that's sort of my lines in the sand, I guess. And what's interesting is the way that it's powering through this really important resistance zone up around 2320. It's gone through it like butter. So that for me is very interesting, especially with rates doing what they're doing, but there's geopolitical risk around. So is this a big flight to gold ahead of possible Iran attack on Israel? I mean, that's a pretty big issue. Is that causing this spike? And if Iran is getting cold feet, do we then see that a mean reversion event? And that doesn't mean it's over for gold. It could then go and do that. So that's just a short-term thing. So that's sort of how I'm looking at it, going, wow, it's really quite interesting that it's flying the way it is. And, not surprising after years and years of consolidation. So I really expected it to really blast off when it did go. But, not much higher. And it's really, there's nothing left stopping it. So 2470 is that number for me where I just totally accept that it's broken away from that range below. And, it's getting up there. But until it actually crosses above that level, I can still see it doing a mean reversion event, which shakes out people who are late to the party. And, back to support, which would be where resistance was. And then it could just take off again. Or, stranger things have happened, could go all the way back to that point of control before turning up again. But things definitely very bullish. I hope you did manage to get on those latecomers that I told you about a few weeks ago, so you could join the party. And yeah, very interesting that this is occurring while rates are actually selling off. So that is usually a very bullish sign for gold, I'd say. If bonds are getting smashed, inflation really taking off again, and we've got this big spike, but that geopolitical risk around Israel and Iran does cloud things a little because so often you can have a geopolitical spike, nothing happens, and then that heat comes out straight away. So it'll be interesting seeing what happens over the next few weeks. But right at the moment, I'm just going with it. I'm long gold, really had a plunge on it, and seeing what happens here. Because really big picture, you have to look at the way gold can move, busting out of a very long-term range, really, from 2011. So that's a long time that it's been sort of stuck around this 2000 level. There's no reason why we're not about to see something much bigger than people expect. So keep that in the back of your mind. So let's jump to bonds and see what's going on. So here we have the US 10-year bond yield chart. Again, yields go up, prices go down. So this is the bond yield going higher in the US over the last few years, which is bond prices selling off. So this is actually a big sell-off in the bonds. And I've been saying if rates headed above 4.4%, I was getting wary that we could see a bit of a spike higher in yields. And that is occurring after the CPI numbers came out hotter than expected. This is pretty interesting at this point after the inflation scare to see it rising again, really putting that notion of inflation just dropping straight back to zero in a straight line, possibly putting that out to pasture. And, that throws a can of worms into proceedings, and we've got to figure out how to proceed. So just looking at these bond yields, again, I've been sort of showing you long-term trends, and this is going back, 20 odd years or whatever. If we're just following those trend shifts, it's been pretty good. Nothing's ever perfect. And I don't really trade off this. This is more giving you a sense of what's going on long term. But those long-term yields are still trending higher, right? That 10-month exponential is still well above the 20-month simple. So I think, we're closer to the end than the beginning, and this jump in yields may go on for a long time, or it may only take another few months before something cracks and yields fall again. But you can only go with what you're seeing right now and what's happening. And, I was saying to you when it was above 5%, we saw that sell pivot. And it was like, well, rates are going to come off here. And they did. So we've seen a nice fall in yields. But if you're looking at the long-term structure, really, that uptrend's never been in under threat, really, has it? If we're just looking at this, when you're looking at an uptrend like this, every time it's breaking out to a new high, you're looking at the previous low and saying, well, it needs to go below that to threaten the trend. So following along, we're saying it needs to go below there. And then here, this is the most recent one. So yields actually need to head below 3.2% to threaten this current uptrend, which is the big picture one over the last sort of 3-4 years. So from that point of view, it's still trending higher. Yields are still trending higher, even if we've got the short-term moves down. And, it's turning back up here. And what I'm wanting to look at up close is this month. If we get the close above this high, which is what, 4.35%. So again, why I was sort of talking about that 4.4% region. that's going to create a monthly buy pivot. So uh, a long-term uptrend in yields and a confirmation this month, if it does close above, 4.35% of a monthly buy pivot, well, what reason have you got to be bullish on bonds? None. That doesn't mean that it's not going to spend a few months rallying, even retest the high, whatever the hell it wants to do, and then, drop like a stone if there's a commercial real estate property crash or Japanese bonds get hammered so hard that, Japan becomes a basket case. I don't know. But things happen when rates stay high for a long period. And an economy that's been so addicted to these very short, or sort of very low rates for so long, it shouldn't take too much to cause some real problems. But if, inflation really takes off, who knows that they're not going to raise rates again? I mean, you've just got to look at that trend, and why can't it break above 5%? What sort of panic happens then? And then it turns down. Where is that peak rate going to be? Where is the long-term trend going to actually turn down? And it's not until it turns down, as you can see all through here, that you can become pretty confident that you are at least going to see a fall in yields for the immediate future. So while that's the case, be wary of the fact that it's turning up like this for the moment, and just trust, I guess, the charts and what they're saying. So getting a bit wary of being too long bonds with what's going on right now, and um, the sort of bond proxies, or interest rate exposed sectors, property, etc., etc. Commercial real estate in the US, some of those stocks down 10% the other night. So it's worth watching and worth keeping an eye on. Very interesting that gold has managed to rally despite what's going on here. And look, who knows? This could be a short-term thing, right? This could be a final gasp higher in yields before all of a sudden turning down. But that would be a story for another day, to allow that to all play out and then go, okay, if it does that and all of a sudden the long-term trend just shifts down and this was just a bit of a dummy, I'll then change my tune pretty quickly, because it is up so high, at a cyclical high from 2007, where things really did crack to the downside. So things can change very rapidly in this period late in the cycle of interest rate rises. It's just how long rates have to stay up here to cause real problems. And this is the thing, as let's say commercial real estate, et cetera, their loans rolling over the next few years. They're sort of locked in for now. Then they're not under pressure. But as rates stay high for a long time, you get more and more people rolling off to much higher rates and more problems coming out. So like we saw here, it stuffed around there for quite a while before something cracked, and Bear Stearns, etc., Lehman, from there. So that's the situation. Those yields marching higher is interesting. Oil, I'm keeping an eye on, but I really need to see it breaking above 96 Brent crude to sort of get pretty excited about what it could do. And gold, very interesting what it's doing right here now. Is it geopolitical buying, which could get snuffed out quickly, or is this just a major, major breakout we're witnessing, and gold could hit a hell of a lot higher? I'm not sure which, but I know that we're long and going along for the ride for now. All right, cheers. I will come back with more next week.